Hello, everyone. Welcome to Let's Talk Markets Live on this beautiful December afternoon. We're really excited to welcome back a good friend of the show, Erik Smolinski from Outlier Trading. We hope you're all out there enjoying a festive holiday season. Thought we'd take a look back at the year that was and chat about what's happening in markets right now, and maybe even offer a peek at what to expect next year if we can figure any of that out. It's kind of like a ghost of Christmas, past, present, and future, but not creepy and Dickensian. So, Erik, let's start with a little trivia. Can you guess who our first guest of 2025 was?
So the beautiful part is I have the answer highlighted. So I have a sneaking suspicion, but fun fact, I had absolutely no clue that was the fact, which is actually kind of fun.
Your first and your last. It was Erik Smolinski.
That's funny.
You win a Kobe beef steak. So back on January 8th, we got together to kick off the new year with a chat about NVIDIA. So let's start there.
I love that. Also, is Kobe beef, I don't know what that is compared to like Wagyu.
It's like okay, I mean, if I say it's the same thing, we're going to get some hate mail.
I'm going to hate it
really
if it's the same thing.
But it's very, it's like very similar. Wagyu's like the Kobe has like from a place in Japan, like a specific.
Oh, Jesus Christ. Okay.
It's like champagne and, I don't know, not.
Listen, man, chicken fingers are good. Chicken fingers will do it.
Yeah, I love chicken fingers. Right?
Yeah,
that's like,
who doesn't?
So it's like a standard here. Yeah.
With NVIDIA,
yeah.
What do you think of its sell-off?
So, I mean, I hopped on the Michael Burry train. I'm not gonna lie. Like I found both his analysis compelling, but also like this is like a massive bubble. And if we put, I think in our newsletter at one point, we put out the sort of incestuous ecosystem of funding and investment and revenue that is AI, and NVIDIA at the center of it all. And, to me, and I'm a pretty big believer in the tech, but the valuations, they just, and NVIDIA is a little less so, but still, we're so far ahead of our skis. So, I think it's got a ways to go to come back to earth. I don't know.
What do you think of valuations, right? Like if we do a time series of valuations, they've been blown out for a long time. So,
it's like the market can remain irrational for much longer than you can remain solvent, right?
But is it irrational? Like that's what I'm curious is there a potential for a new paradigm where SPY at 20 PE is not enough for how much growth that there is expected to be?
So you're saying maybe this time is different?
What I'm trying to understand is like, I haven't done a regime analysis on PE and like forward PE. I know that there's tons and tons and tons of clips of them out there. So I'm actually genuinely curious, like if there's a shifting baseline of like what's quote unquote normal, because everybody cites the same, trailing 12-month PE and then forward PE, right. But it's almost like, is it the same as the 80s? Like, is that the benchmark? I'm just not super convinced that it shouldn't be at least somewhat temporally adjusted.
Okay, totally fair. I think that, there's still, to me, there has to be some relationship between the price of a stock and its expected cash flows. So we started with NVIDIA. Let's take a step to the side. Let's stick with Burry and let's look at Palantir. How about that? Instead of NVIDIA, let's look at Palantir. Do you think differently if we're talking about Palantir's valuation? And are you familiar with it, I guess, also?
I'm familiar with it. And I don't like the idea, like I actually take a really big issue with the idea of like markets can remain irrational longer than you can remain solvent, because that poses the individual as being the rational one, and then everybody else is being irrational. Whereas sometimes I think that's like really egotistical. Like, I'm the rational one and the entire market is irrational. Like, that doesn't really make sense to me.
No, but I mean, it says like, the market is made up of animal forces, right? There is irrational exuberance in the market. There are manias, there are bubbles, and this idea that there is a rational valuation in order to appropriately allocate capital, that it's like foundational to capitalism, right?
And I do agree with that, and I do agree with like growth rates and stuff like that, a really important part of the equation. But here's another rub that I always have: this idea of like trailing EPS, forward EPS, sales growth, revenue expansion. All of that makes sense. But if we think of what happens during an earnings season, we come into earnings and most companies should beat EPS expectations. They almost always do. And that has a lot to do with the incestuous incentives of the banks that hold the individual securities, that are evaluating them, obviously want them to look good because they're on their books, and so on and so forth. So part of me also thinks that we're not even really using good metrics when we're using like forward expectations compared to what the growth rates tend to realize out at. So something like Palantir, I think it's easy to evaluate it as overvalued. I think if anybody was going to take a stab at something that is expensive for what it is, I think Palantir,
I might say wildly overvalued.
But somebody wants it here, and somebody keeps buying it here. Sure. So I guess this is a big difference between like the value investor lens and a trader lens, realistically speaking. Because
are you just like sort of a proponent of like the strong version of the efficient markets hypothesis? Is that what you're saying? I mean, but that sounds like what you're saying here.
How? Explain to me how that's what I'm saying.
Because you're saying that the market is efficiently arriving at a valuation, that the fact that somebody is there wanting to buy it at this valuation is proof that the current valuation is, I don't know, irrational or reasonable, but at least like, one at which people want to transact, rather than acknowledging that we might be in the midst of a wild mania, and that this is all going to come crashing down to earth at some point in the very near future.
I feel like that's the difference between a value investor versus a trader. Like what you just explained to me sounds a lot like a value investor. I need to evaluate the price of this thing relative to what it is. Whereas I've been in markets long enough that I know that there's tons of people. I don't even know what the valuation is for Palantir right now. I know it's high. I know the multiple's huge.
I'm like seeing 181 forward PE. But I think the current PE, last I heard, was in like the 700s. I don't. It's come off, but maybe lower. Maybe it's like the 500s. I don't know. It's like some order of magnitude PE different than what you normally see.
Exactly. So from the value investor lens, they would look at that and say, like, yeah, this is absolutely insane, and rightfully so. From a value lens, it is so. But if I look across Palantir's performance over the last 12 months, it's up 134%. So that means that regardless of the valuation, regardless of how good the dollar is compared to the forward expectations, there's a lot of people trading it who don't give a flying crap about that. And they're saying, I think other people are going to buy this thing and it's going to go up, which to your point is a big piece of a bubble, right? Because who's the last person? Who's the last person to buy?
That's right.
But the fact that the move has been sustained for so long is, I don't know. I haven't done a lot of analysis on bubbles. I find them fascinating. So I don't want to speak from too much of a point of ignorance. A lot of the stuff that I look at, I spend a lot of time analyzing like the statistics of it. I've not done this deep for bubbles in terms of like what the average expansion is versus the contraction once it pops and how dense that is across the market relative. But I think from a value lens, I agree, things can get expensive and that would be unattractive to those folks. I think from a price performance lens and a momentum lens, which is a whole other bucket, momentum traders, they don't really care that much about what the EPS is. We care about what the 12 prior months of performance minus the most recent month is in a cross-sectional framing. So I guess to summarize all that, to me at least, it seems like there's a lot of different people doing different things, playing different effects. And I think that that can propel a stock way beyond what quote unquote value people think it should be.
Okay. I'm trying to pull up something. No. Okay. Let me try.
Meanwhile, while you're pulling that up, we should talk about the fact that Shane Gillis had one of the most awesome statements about Palantir, because I guess the CEO of that company is like really big into the Antichrist or whatever. So
yeah, he's definitely something.
So Shane Gillis was saying, he was just like, I don't know who the PR team is for that guy, but the fact that they let him do like 3 Antichrist presentations is bad. He's like, you get one Antichrist presentation, and then you got to move on. But the fact that this did 3, who knows? I don't know if valuations apply to a guy that does 3 Antichrist presentations. Okay, teach me about bubbles, please.
Okay, here. This is like I've shown this before, this image before on the program here, but it really, I find it compelling because the essence of a bubble is that and generally we talk about it from a valuation perspective. This from Bank of America shows it just from an index return perspective, but I think it does the trick very well. And what it shows is, like there is sort of a natural level of returns in the economy. And those returns are based on, corporate earnings growth. And those earnings can grow at certain rates for certain periods of time. But often when we're seeing excellent growth in earnings, the market enters this mania where it goes up at a far greater pace than what those returns should warrant. And so these are, some of the classic bubbles throughout, recent history. And what it shows is with AI, the AI euphoria is that we are going to a level we didn't even see with telecom and .com. And we're going at a rate, and we had Didier Sornet on the program a couple of months ago, and he's an expert in bubbles. And what I found most compelling about what he tends to look for is this idea that the growth of the price the growth rate is what is accelerating. And that's what leads to, it's not just that the price is going up, but the rate at which it's going up is itself increasing, like the first derivative and then second derivative, right? Yep. And so, what he tends to look at is, his signals find that what I think we would traditionally call like a blow off top, and predict that is, the end stage of the bubble. And he has said, we're not there yet with AI. His signals are not pointing to anything massive yet. But when you look at a chart like this,
it's stupid. This chart is absolutely stupid.
Tell us, why is this chart
what do you mean when you look at a chart like, the only thing that you could derive from looking at a chart like this is I could pick 2 points in any market at any random distance and make it look any way I want. So the fact that first bucket goes for 6 years. The second bucket goes for 11 years. The third bucket goes for 8 years. Like, what are we doing here? We're picking 2 random ass points.
Market events.
We are picking so the railway mania was 46 years. When did it start? When did it end? And who picks it?
6 years. 1840 to 1848.
Oh, well, your boy can't do math. But I guess I moved too far. I moved too far away. But I mean, the big thing though is absolutely sampling error. Like, this is absolutely picking random ass time frames and saying this one fits my thesis. This one I get a peek and it looks like this.
It's picking historical manias, like clear bubbles.
But then why is
they're only clear in hindsight, which is part of the issue here.
I don't think you get to pick arbitrary durations, is my point. Like, if I plotted a rolling 6-year period for the railway mania before and after, I would find anything that I want to see. So from like a sampling perspective, this is as cherry picked as you could get. It's saying, I think it started here. This shows me what I want to see. This is what I define it as.
I mean, I'm going to disagree with you on this one.
So could you pull that back up real quick? Because I am actually genuinely curious about a second part. So for the AI euphoria, why didn't we call it in 2020 at that bottom? Why did we not say that that's a blow off?
I think that is totally fair that you could have started the chart at the bottom after that peak and said that's where we're starting. You cannot know where it started when you're in the midst of it. That's an absolutely fair criticism. You can only know looking back once the bubble has burst.
But in that hindsight, then we're just cherry picking. Like, again, the fact that we just said that, right? In my mind, if we're following that convention, that dip from 2020, what was the bear market? Was it 22? I think the last bear market. Yeah. So that should be its own thing comparing to this convention. That should have been the blow off because we went up, we came down in 22. That should have been its own thing, but that doesn't fit the narrative.
Well, but in the context of this move, it looks like, even though that was the technical definition of a bear market, it was really more of a correction. It was fast, vicious, and gone like that, right?
Yeah, that part I'm okay with. I guess the main thing I'm pointing out is I think it's nonsense for us to look back in hindsight and say this is what happened. I think if we're saying that there's some sort of repeatable effect around bubbles, around these kinds of effects, we should have a definition for what is the start of this new technology. So the railway revolution, whatever, what is the start? Is it when the first rails were laid? Is it when the first train was made, the first 5?
I mean, that's like this amazing, like, did you ever read Reminiscences of a Stock Operator?
Yeah, of course.
Right? And
classic.
Like, that's like classic, but like, such an incredible narrative of that period, right? Like that was this period of time in which you had the convergence of the Industrial Revolution and the Financial Revolution, right? And suddenly the stock market was accessible to all of these people in the US, at least, where it hadn't been accessible to in the past. And it brought those animals, right? Those are the animal spirits that you see when you bring people in, individuals in, to a market. It often gets very detached from the fundamentals. And the point being that over a long enough time period, those fundamentals do rule the day and historically have always ruled the day. No time has ever been different. We always eventually have to come back down to earth, but certainly it is impossible to know when you're in the midst of it. It's impossible to pick the top. You'll generally go broke doing that. And fine, I'm saying this while, as I mentioned previously, Didier Sornet, this professor who has studied this problem extensively, would disagree. And he would say you can predict these movements with the right kind of math. And bubbles are everywhere, and they are inflating and bursting all the time.
LOL.
But I don't know the math.
Yeah. I think the problem is if the math was that good, there's a fund around it. And
he has one, yeah.
Yeah, and how's it doing? Because
it's doing very well.
Yeah, the performance, the long-term performance of the fund is always the question to me, and how it's getting there.
Yeah, but I mean, but okay, so we're talking about this on an interesting day, right? Nvidia's down 3.5%, Palantir's down almost 5%. Is today just sort of like, a standard sell-off in the context of this market? I mean, what is the options market? You're looking at the options market day in, day out. What is the options market telling you about what these moves? Because we've seen a few of these now since Burry came out with his thesis. We've seen some big drops, some more sustained than others. What does it look like from that perspective?
I think so. An interesting thing we were looking at last night on a stream actually was the fact that VIX was down, but vol of VIX was up. And that's not like some profound revelation, but that is a weird relationship that you typically should pay attention to when it does happen. So the market does this almost every single time we start getting near highs, but I find that the information suite and the catalyst suite is stale. So what I mean by that is I typically believe in order for the market to have these larger legs up, you need something that's doing it. A great example in a microcosm is actually an MSOS. I had short straddles and strangles in there. I was just trading risk premium because the vol was high. There was some sort of decision that I think is supposed to be coming on like the 15th of December, 15th Jan. I don't know which one, but sometime soon there was going to be some sort of federal court taking up of a important case to the marijuana stuff. And I was just trading vol around that. And then Trump came out, made a statement about cannabis, and then it sent it flying, completely different catalyst. Yeah. And the point I'm making there is like the market is full of those things right now. And based on a lot of the general analysis I do in terms of like periodic vol, which I was actually thinking in your prior statement about like coming back to earth from bubbles, I guess the thing that I think of is like what earth is defined as. I believe it shifts. I don't think it's a static number. And I also think that applies with vol, because a lot of people would look at the market with where we're at now and how things are. And we're hovering near highs. Last earnings season was good. We're in the middle of a pretty solid the start of a big technological change, one way or the other. AI is going to continue being a massive disruptor, accelerator. We're seeing layoffs coming off because people are being replaced. It's changing everything. But as all of that is happening, we still have a series of wild cards that I think keeps the market on edge. So for example, in Palantir, I think just about everybody recognizes that thing is expensive relative to itself, exactly to your point. So then even from an investor or a trader lens, the question you have to ask yourself is like, how much profit do I want to give up in this thing before I get out? But if you look at like a 5-year chart, the overwhelming of people's basis in there is at freaking 25. It's at 25.
Yeah.
So there's tons of people that are sitting on a decent amount of profit. So then the question there is always, what's their management approach? So all of that summarized, I think that when the market is near these levels, you're going to have oscillations near highs. It's not always going to be an immediate breakthrough, especially sans good catalyst. We're in a generally elevated vol environment, although I would argue vol is not as high as it should be. I think vol is cheap compared to what it should be, but still slightly elevated compared to long-term norms. Until there's some sort of clear catalyst, I don't think anything of the pullback until it makes sense to me one way or the other, something that would lead me to believe that there's a structural change. Now, that being said, there's been a lot of really interesting price action off of the 3 November highs that a lot of stuff was posting. We had that fall over like 6 November, 7 November, rallied back up on like 10 November. And that's been the spot to beat in my mind for like a clear trend reversal. So like right now, I still view us in a long-term uptrend, but a very short-term, using the time frame of like a month, downtrend. And SPY did beat those levels, specifically at like the 12 November range, which is important. So now, in my opinion, the question is, with this sell-off, the point of control on a 6-month time frame, which is just where all the volume is, the most of the volume is at 664. So that still places well within striking distance of all-time highs. I think in general, the market is in the process of oscillation digestion. Typically, tail half of December, seasonality is mixed. It's not a super strong month. And vol will likely continue to trickle down as people take time off into the end of the year.
Yeah. And you've got, you'll have tax loss selling, but there's not much.
I hate
not
that.
a ton to sell.
I know
right
it might
now.
shock you, but I have a very firm stance on tax loss harvesting as one of the dumbest things I've ever heard in my life. Hate that.
But then you'll go into the new year, and you might, at that point, you might actually start to see some people realizing profits, and maybe the names that have been up so much on the year, it could be a pretty weak time. I mean, does anything in the term structure of options suggest that to you?
Not really. It's actually really complacent. The skew is not anything to write home about as of right now. The put call ratio for the 30 days in SPY is high, like relative, but it's typically a little high. So it's not like super high relative, but it is a little high. As a raw number, it's high.
Jason agrees with you.
Oh shit, I'm not even seeing those.
Oh,
tax dude. Preach, brother. Carry that candle forward and let them know that that is like the dumbest copium I've ever heard in my life. What I tell people is tax loss harvesting happens throughout the entire year. There's no time that you're just like, oh yeah, now it's the end of the year. Let me get rid of this. If you have shitty trades, you take them down when it's time to take them down. Tax loss harvesting is in January, March, November, December, whenever. It's not, let me bag hold and then rationalize my bag holding. All right, sorry. That's easy to get me going.
I can tell.
I hate that one. It's like people struggle so much to just look themselves in the face and just acknowledge what the thing is, right? I bag held on this. I held it too long. I want to get rid of it. That's what I'm doing. Versus, no, this is a strategic portfolio optimization operation. Right.
All right, let's talk a minute about geopolitics.
Oh, wait, hold on. Do you mind? I had one question for you before that.
Let's go. Yeah.
Looking at the recent market behavior, one of the things that I found was interesting is staples looks a little bit weak here, but discretionary is like hovering near highs. Yeah. I wouldn't expect to see that with like a big expectation of like massive weakness across the market. Utilities was also looking weak, which I typically wouldn't expect to see, right? With the standard defensive sector rotation. What do you make of that in light of the current market pullback?
I mean, are we seeing it with other discretionary stocks, or is it just like staples? I'm not terribly familiar with it.
Yeah, if you pull up XLP, which is Staples sector ETF for S&P, that's like clear 6-month downtrend and capping out around 80. So about the mid-range, not the mid-range. Yeah, it's about the mid-range, a little bit higher. Mm-hmm. And then discretionary right now, which is XLY, is literally hovering near highs. So very frequently, one of the canaries in the coal mine that I will use if I think that the market is really starting to position for something ugly is I would expect to see those two switch, and I would expect to see utilities not getting taken out to the woodshed. What do you think?
Yeah, I'm looking now.
Because the other interesting thing while you're doing that is breadth is good. Like the percentage of S&P companies above their 50-period moving average is 57%, which is good breadth. And our RSP, for those that don't know, RSP is an equal weighted S&P index ETF. So it's a little bit different than SPY, which is effectively now Q's counterpart, because SPY is effectively tech at this point. It's like between tech and telecom, it's like 45% or something of the index. It's tech. So RSP equal weights it, which is a little bit different of a bag. And that's actually doing pretty well. So I do see that softness in the front in tech, but the relationship between those other three, I find interesting. The fact that staples is looking relatively weak compared to discretionary, and utilities is getting smashed.
God, the chart on XLY is really stupid because I don't know if you're seeing this on Interactive Brokers. It's got like a crazy, must have been a crazy print or something of like a 250. So the chart's totally screwed. So it looks like on the month XLY is up slightly.
Yeah, and 20 days is up 7.6%.
Yeah, and okay, even more than this. XLP is up pretty good too. And 3.2%. A month in which we have seen Nvidia down, right? And Qs are like right at like they're almost even on the month. I mean, that's interesting, right? So that is so you're seeing some sector strength in the discretionary consumer spending, but like staples is not participating. I mean, it must just be like staples weakness, right?
Which to me is interesting because if the market is positioning for some sort of rotation, a lot of times you see the inverse there. Those two switch.
Yeah.
So that relationship being what it is interesting to me. And then again, I don't think utilities is a small component to that either. A lot of people start moving into utilities to find some yields, especially if they don't think that they're going to be able to effectively get a large cap yield. Sometimes, people do that for strength, but if you're seeing weakness in tech, they'll rotate out.
Well, Jason is also telling us that Staples is struggling because of some lawsuit settlements.
Good old litigation.
Yeah.
Good old litigation. Love us some of that.
The information here.
Yeah.
Thanks, Jason. I have no idea. I'm not paying any attention on that.
Yeah,
I'm like
that's
so
interesting.
fixated on tech.
Yeah. Well, anyways, it's interesting.
Yeah.
I think the main conclusion I draw from that is just that it's like I don't see what I would consider alignment in terms of like any sort of like rotational breadth indicators, sector behavior. I don't see any rotational alignment in terms of like at least positioning
small
for big
moves,
downside.
but nothing crazy.
Who knows?
All right. Well, I want to take a detour for a second. I mean, markets are down today quite a bit, and Trump is going to be speaking.
Hell yeah.
Tonight.
Hell yeah.
And
get the popcorn.
Yeah. What do you look? You're a veteran. We respect that. We thank you for your service, of course.
No, you guys don't. You made fun of me for wearing camo just because I wanted to wear some camo. You guys were shitting on me. You don't think I forgot that?
We will continue to make fun of you while thanking you for your service in this program. But, I mean, there's a pretty strong expectation. The U.S. is going to war tomorrow.
Hell yeah.
With Venezuela. That's. Do you think that's driving the market move right now? Is that what the market is paying attention to? We've got, oil up 2.3%. Markets are down. Oil's still at a very low level. I mean, $56 is crazy.
Yep.
For crude. When the U.S. is threatening to take on, one of the largest producers of oil in the world, and blockading them from exporting. Yeah, I don't know. And any thoughts on, I don't have like any insight here. I think that war is not something we should enter into lightly. I'm curious what he's going to say, but I don't tend to put much faith in the words of politicians. So what are you thinking right now? What do you think the impact is on markets from what's happening right now?
So I'm asking Grok, and Grok says U.S. imports from Venezuela were about $6 billion in 24. Crude oil was the majority at 5.88 billion. So it looks like based on.
True. I thought we weren't buying Venezuela.
This was in 24. I don't know if what that means now. And again, Grok could be straight up lying to me. So you guys, whoever's in the chat, please fact check this. I'm just reading from Grok. But regardless of what that is, I do think that that is the larger relationship point, whatever it is. So it looks like other notable but smaller exports: refined petroleum, prepared preserved shrimp and seafood. What the fuck is this word? ACYCLIC, acyclic alcohols. What the hell is that? Okay, well, they give us acyclic alcohols and coffee.
Cool.
So
I like coffee.
Yeah, that one I think we can all get behind. But acyclic alcohols, man, I don't know nothing about that. But here's the deal. I think the U.S. is still positioned so strong with respect to oil, which is exactly why you see the market not caring at all. I don't think the market cares at all.
The U.S. has enough oil, right? That's not necessarily the issue. But if you do reduce global supply because of a war, you'd think that would have some effect. Well,
let's see what their broader exports are to other countries. What are Venezuela's?
I think they export most of it to China.
Global. Well, fuck them. So, yeah. So then no impact. Yeah, because right now,
I mean, China will just have to get more illicit Iranian oil. They're used to
yeah,
that.
man, like they're all right. I'm not so worried about helping them solve their problems. They're pretty good at it. They're
Yeah.
very competent. So I'm
Yeah,
sure if
right.
Venezuelan oil slows down.
So why do you think the U.S. has decided to sell Chinese advanced AI chips?
I
Why
don't
would
think they're
the Trump
I don't
administration change that policy?
I don't think they're the most advanced ones, first of all. And I think
Sure, they're not the
I
most
think
advanced. They're awfully
yeah,
advanced.
that's okay. It's as long as
That's okay.
I feel like yeah, I do. 'Cause they're gonna get it anyways. They're
I
super
disagree
smart.
strongly.
Yeah, they're super smart. I think there is a lot to be said, especially with China, that has been broadly like we can test with them as a near peer competitor, but largely speaking, it has been very friendly over the last quite some time. Like we really haven't had a lot of like actual heated exchanges with China. We've definitely gotten close. The media will make you think you're on the brink of war every 4 seconds, but I don't think that it is quite as bad as that. And I actually think building a better relationship with them is good because we also need shit from them. Remember when the rare metal earth export thing came down? None of us like that. So I think it is a world of global political level drug deals.
One of the fundamental ideas that Trump came in with was this idea of creating, Fortress North America and isolating China. Now that was just a campaign slogan that he ended up attacking Canada and Mexico instead of coming together with Canada and Mexico and strengthening China's hands geopolitically. But that aside, like this is another good example where, I don't think you want to strengthen China or improve relations with them in any way. I think you want to disentangle yourself as much as is fundamentally possible. And so like rare earth metals you're right, that is the perfect example where the US needs to kickstart domestic production and allied production, like in Canada, where Canada has quite a bit of those as well. And it's not like an availability issue. It's generally an environmental cost of refinement issue. And, that's the kind of thing where, China has a stranglehold over modern technology, modern electronic technologies, because we have allowed them to, thanks to globalism, right? And if you're going to disentangle yourself from China, the last thing you want to be doing is selling them advanced AI chips and, potentially destabilizing things geopolitically.
I'm not sure that the chips are going to be the thing that tilts anything that meaningfully in the near term. I view it as kind of like playing with pawns. My genuine expectation is that in the next few years, when we have realistic domestic production of chips, I think you'll see a new paradigm. I think right now there's a massive incentive. Keep the status quo in Taiwan, China, just keep everything mellow for the time being as best as humanly possible while we're trying to onshore production of chips, which we know is literally crippling. So
yeah, of course, absolutely.
Yeah,
but, again, like you don't want to empower a state like China and give them more technological power, which we know they already abuse.
Yeah, it's just not that one-sided though, right? Like that, I guess that's the rub, right? Like we still need stuff from them. So if we were looking at this in a vacuum and there was no thing that we needed from them and we were just like, yo, have these chips? Sure. But it's like, let's keep it a buck. The US ain't benevolent.
But again, we didn't Biden put the initial ban in. We were still getting everything we needed from China.
Yeah, but that was how long ago, right? Like shit changes. When was the rare metal export tariff
3 years ago, I think?
Yeah. So my point is I think even when we're talking about like the campaign, what that was and how things are executed, I think it's reasonable. You want to see whatever was talked about and promised broadly delivered, but I also do think there's an expectation of shit changes.
Okay, so quick, let's go back to Venezuela, back to war.
Yeah.
You were like, hell yeah. Okay, so that's like, that's your thought? Like they deserve it and it's time to take action?
No, I also don't think it's going to be anything like that. I
Okay.
genuinely feel like a lot of this has to do with this war on drugs and these boats and shit like that. I think it's way more performative than anything, but I find a lot of what it seems like Trump does is quite performative, because we've also seen like the taco stuff, and so there's a lot of
Right.
dynamics that go. And I do think a big part of how he does business is very purposeful. It's controlled chaos. And there is an advantage to that. So yeah, I don't think that there's any reason to actually go to war with them. But I do think that there is something to be said about getting them to control what's coming out of their country a little bit better. I think that is a fair, same thing with China and fentanyl. Like, I think that you do need some domestic help in order to curb the movement of those things. So if you don't feel like you're getting it, and again, Trump is hyper aggressive in how he does stuff. So it doesn't surprise me seeing him take that lane, but I also don't think Congress would be like, yeah, let's make a declaration of war. Like, I don't think that's happening. And I also don't, I
agree. That's not going to happen.
I think Trump knows that. And I think that's why it's not been done. So yeah, I think it's performative. And I also think, my opinions aside, if we look at what the market is saying, the market also does not care. Like,
the market is not, I mean, the market's dropping, oil is spiking, but it's nothing like what you would expect if we were on the precipice of war with one of the top oil producers in the world.
Exactly.
That being said, we have blockaded them. We are killing people.
Hell yeah.
Randomly.
Good old blockades and some missiles at boats.
Extrajudicial killings.
That's what we're talking about.
That's what we're talking about.
Make peace or die. You know how that goes.
There is, I used to know somebody who was involved in designing the missile defense system. He came up with some of the original ideas. He was an MIT guy for the missile defense system. And he always said, peace through bombs, peace through strong weapons.
Fuck yeah.
So, sure, that's a view.
Yes. Listen, what I find, I call it the veneer of civilization. We eat with forks, we talk about Wagyu, but at the end of the day, we are animals, bro. And you will always see some of that coming out.
That's where we started this conversation, animal spirits, right?
Yeah, exactly.
But here, do you know what's being released on Friday? It is not an economic release.
A Pokemon card?
No, that would be no. There was a top set that was released today that I missed out on because it's impossible to buy boxes of baseball cards anymore. But that's that's not here nor there. Good. It probably saved me a few $100. Yeah, but no, the Epstein files are due to be released on Friday. Is it any coincidence we're talking about going to war on Thursday? Okay, we don't have to go there. We're a markets program. I just like to throw shit against the wall.
Not gonna lie though, it is an interesting point. Like that is an interesting point.
It's a thing that happens.
When were the dates set for these different things?
The dates on the Epstein. I mean, that was the bill that passed that he signed into law. So that was quite a while ago. A month ago, maybe something like that. Then right after the government shut down, and then the blockade started this week. It's odd, right?
I think the good part, realistically speaking, is everybody, like the population, is latched onto these Epstein files so freaking hard.
Not even war is going to distract.
That's right. I'm pretty sure a nuclear missile could launch and people would still be like, yo, where are these Epstein files, dog? Like, get them out here. Like, I'm going to read them in my Fallout bunker because bastards are hiding stuff.
Let's pivot to something way more fun. Cannabis. You started talking about it. So, there is a cloud of optimism around the weed trade. When Trump said recently this week that he was very strongly weighing an executive order to reschedule the drug. Now personally living in a civilized country, that's not really an issue here. That of course it's legal and can be sold to, consenting adults, but in your country, that's not a thing necessarily in every state.
In every state, yeah.
But what do you think? You're putting trades on, you're seeing some good vol around these stocks.
That's really the main thing. I'm completely indifferent. I'm very much you should do whatever the fuck makes you happy. But from a trader lens, I like making money, and risk premiums are good to make money on. So that's the main thing, is that there's a lot of catalysts right now around the cannabis industry, and both the broader sector indices, or I guess ETFs, I should say, the sector ETFs, and then the individual constituents. There's just a ton of opportunity right now with respect to vol. But like anybody that's used to trading vol, especially with derivatives, you put a bunch of them on, you're going to get kicked in the nuts on a decent number of them. You got to deal with it. And then you keep plugging away. That is the nature of the beast. You are taking risk for other people. Take the risk, size it appropriately, and just expect to lose a not insignificant number of them. Size them smart. I was talking with somebody about trading earnings, which is not all that different. And they were like, oh, I got a $5,000 account. I want to do this. And I was just like, bro, no. Just whatever, for the love of God, do whatever you want. I'm not a financial advisor, but for the love of God, don't do that. Like, that's just, please do something else. Like, just anything else. So yeah, trading vol and stuff like that can be really interesting, but it is so easy to dork it up. You can kind of see it, it's there, but the market is freaking smart, man. So there's not like these huge fat options just out there to be sold. You really do have to parse through stuff pretty carefully and then manage your risk pretty carefully. And risk, especially when you introduce derivatives, it's not just direction anymore. You now have direction, time, vol. You've introduced way more additional factors that you get to contest with, which is really the summary for that is, if you are a masochist and if you want to spend most of your time not understanding what the fuck happened to your money, options is for you.
There's the best pitch I've heard yet.
It's my sales pitch.
There you go. Look, markets are down today, but traditional safe havens are up, like gold, crude, GameStop, the usual.
Yeah, and to your point, Staples is up on the day. Not much, about 0.5%, and discretionary is down on the day, about 1%. So that actually that does drive.
Decoupling? I don't know. All right. So GameStop's up almost 4%. Silver. Have you been watching silver?
Not really. I came across it a couple times just from a few alerts. So I was trading futures on it. Same thing with gold. I'm literally just trading momentum. That's pretty much it. So I don't understand it. I don't understand anything about gold or silver. I know that they're shiny and people like it. And I know that sometimes the price on the chart starts to just go haywire up. So I will happily run with that when it's happening. But I've actually been truly fascinated by it. I've been trying to understand different catalysts and explanations for it. And as always, when you do that in markets, largely it is a fool's errand. I go into that knowing that, just because there's so many different factors, but the momentum's undeniable. So because of that, you boys there. But other than that, I could tell you, if you look at a chart, it goes bottom left to top right, just like that.
Silver is just wild. Like it's trading right now at 66.72. It's a crazy chart.
Yes. Yes. Literally 6 months ago, it was at 35.
Yeah. That's almost doubling in that span of time. That's kind of unprecedented for silver, but gold, same, not quite the same, but a massive move in a short period of time.
Profound.
Yep. Yeah. I've owned physical metals for a long time. I never really trade them. I just kind of have them, and I don't know. It's just
a good boomer move.
That's cold, man. That's cold.
You could just stack it somewhere too. Take physical delivery of it and put it in a
man,
little triangle or something.
Yeah, look, if everything goes to shit, you want some lead, you want some silver.
I'll tell you what I
Gold is
don't
tougher,
want is silver. If things go to shit, I want water, food, and bullets.
That's what I'm saying. Lead and silver. That's what I mean.
What am I going to do with silver? Shoot vampires? What are we talking about here? Are we hunting Are we going to make wooden crosses? What are we? This is Buffy the Vampire Slayer?
You're going to need to exchange things for goods and services.
Oh, here, carry this worthless, heavy thing and give me
paper?
Food.
What are you going to do? Give them pieces of paper?
No, we're going to go back to a barter economy. It's going to be, I can sew something for you.
I'm telling you, silver's going to be worth it. Gold is tougher.
I swear to God, Dave, if there's an apocalypse and I see you with a backpack, I'm taking all your silver and I'm just throwing it. I'm just throwing it. And then we'll go find some Wagyu and go back to the apocalypse, which will be better than the Wagyu.
Perfect. I'm with you. All right. But GameStop, why is GameStop? Do you trade GameStop?
I do. I actually maintain a position in there. A big part of it, I've said this a million times and I will reiterate it. I absolutely view myself like a guest in the GameStop community because I traded the initial squeeze, traded the second squeeze. When I traded the second squeeze at that point, I had the YouTube channel. The first squeeze I didn't. And then I found that a bunch of people were really interested in the options markets around GameStop. And I thought it was like the perfect place to try and share information to keep people from lighting their money on fire, because a lot of folks, especially in GameStop, they're buying out of the money weekly options with vol that's 500% and 2 days left. It's like crazy. It's like, so I made a bunch of content, trying to at least explain how some of these dynamics work so that people have a slightly better shot. So anyways, I maintain a covered strangle in there more as a participation trophy than anything. Now, I will say that it is shockingly been a really good position on the year. Like, it's hilarious because GameStop on the year is down pretty big, but because the vol in there is so profound, it's good. I think the biggest thing I'm so interested in with GameStop is they are doing okay with respect to profitability, but it's from effectively interest earned. Their Bitcoin holdings are not looking super good, which who would expect otherwise, right? Bitcoin moves. I don't view that as some sort of store of value right now. That's more of a speculative investment, and you kind of have to treat it as such in the way you think about it. But I still am firmly in the camp of they need some time at some point, preferably sooner rather than later, to do something with the money. And like, it's great that they're making interest on the money and it's generating profit, but like, they're not a bank. That's not their long-term plan. And they've had this billions for a little while now. So they're starting to do some sort of small pivots, like the trade-in everything. They're getting into the card grade. Like they've done a few things, but I'm just very eager to see what they think of next in order to use this money to continue transforming the business. The good part about it is it's so close, well, depending on how you calculate intrinsic value, that it's not super high risk as far as I'm concerned, and high volatility, but not super high risk. And for that lens, like a covered strangle is such an ideal way to trade something like this, because I'm long equity in case there's ever some sort of blow off. I can easily transact there. If there's sideways markets like there often is, then you make a ton of money from vol, from selling the two options legs that go with the covered strangle. So I'm so eager to see what they do with the money. Now, I actually did have a question for you on this. I'm glad you brought it up, which is, what do you make of the duration that they've held the capital for? I don't have quite as deep of a track record with analyzing like raising money opportunistically and how long you carry it before you use it. My instinct is that it's been a while, but I also just don't know if I've just been impatient and I just don't know enough yet.
Okay. One, I have to say, I think that the GME chart here is compelling. I think it's like, it sure looks like it has found its bottom and it's moving up. I thought Burry published something over the weekend, I think, or no, maybe it was like just after the weekend, that was both fun to read, like an interesting sort of historical review of what happened, but also, coming up with some ideas as to why they're undervalued given this massive amount of cash that they have. But I guess you could probably surmise that they haven't seen, like, they want to do something with it. And we're just generally in this market that is very highly valued. And if you're Ryan Cohen and you're like a value investor, it must be pretty hard to put that money to work. And
they have the runway.
Yeah, and you're not in any rush. You're making a shit ton of money off the interest, and maybe it's a perspective that things are going. The fact that the inaction could be this glimpse into his perspective, which is things are going to come crashing down, and at that point, I'm going to have my pickings, and that's when I'm going to move. At the same time, I don't know, it was, like trading cards and cards in general has been and collectibles has been like a massive growth catalyst for them. What?
How did we get to cards?
We're back to cards. We're back to cards.
I knew somehow you were going to find a way back to cards, and we're here. Okay,
look at this. Like, remember when Kyle Schwarber hit 4 home runs he hit?
I'm so glad I can't see that.
Right.
What does that even mean?
I got great baseball cards like right on my desk here.
Good.
PSA just announced that they're going to buy Beckett, which is like this consolidation in. You don't even nothing, right? None of this is nothing.
What is Beckett?
Okay, Beckett is another card grading service, as well as they've got huge amount of data, historical and real-time data on card prices in the market.
Oh, that's cool.
So it's like an acquisition of data and a competitive grading service. PSA here is awesome. Rolling up. I have antitrust concerns about this acquisition, but if PSA saw this as a big enough opportunity, kind of like, it's a little surprising you're not hearing anything about GameStop doing something like that, given that this is this has become a focal point of their business. So, I would much rather see GameStop doing something like that, but then again, they've got this big partnership with PSA, so maybe they can't risk it. I don't know, but it's a good question as to why aren't they doing anything with that money. I suspect, but I'm just guessing. Just talking about here.
Well, I broadly align with that because I listened to the very few interviews that he's done, and he has made that general perspective clear. But here's the big follow-on question: how long do you do that for before you make a pivot, anyways? Right. So let's just play a scenario. Let's say that the next 5 years is generally slow, grindy up, right? Let's just say that's what ends up, going over that time frame. Like, how long do you wait?
Yeah, it's almost like the opportunity cost is real there, right?
Right. So what I have no frame of reference for how that calculus would be made.
Yeah, I have never been the head of a public company with like many billions of dollars in the treasury looking to put it to work. So I can only guess, but I think you're right. Like, at some point you have to start saying, like, I need to put this to work. I want to build, this sort of large organization, and you got to get to it at some point, right? You're right. It's not supposed to just be a play on like high interest rates and
which are coming down.
Right? Yeah, right, exactly.
Yeah.
All right. Well, anyway, we're not gonna solve that here, but I've enjoyed the conversation. I hope all of you have as well. Eric, always a pleasure. I really appreciate you. Any closing thoughts on anything that we missed, or how you see things shaking out over the course of the rest of the year?
Yeah, I think the biggest thing is the fact that you're wearing like a throw up green shirt, and you guys gave me shit for camo, but somehow your shirt got by unscathed. I don't really understand how that went down. And you're wearing a blue shirt under the green shirt. I don't know what that is. So I just want to throw that out for the record that I think
barely know how to dress myself. All right.
I think this is bullshit.
This is not a surprise. I mean,
okay.
I will never give you shit for it. I keep forgetting. Is it a It's a Roman helmet, right? Not a
It's
Spartan
a hoplite helmet. Yeah,
It's a hoplite.
it's a
Okay, that's I love that. I love your helmet.
What about the
I really-
saber-toothed cat skull?
No, that's really cool. But like, I happen to be immersed in ancient Greek history at the moment, and so I just finished Herodotus. I'm reading Thucydides. I'm enjoying re-immersing myself in ancient Greek military histories.
So what about the mammoth tusk from Russia?
Yeah, that's cool. Sure. I mean, it's a mammoth. It's much more recent than the saber-toothed cat, right?
That's facts.
Yeah,
that's facts.
There's a museum here, and they have the Museum of Nature here in Ottawa, and they've got this annex in Quebec where it's like a warehouse of all the stuff they don't have room for in the museum.
That's cool.
And I got to go on a tour there, and their saber-tooth skeleton is just incredible.
That's so cool.
Maybe one day when we get you up here, one day a year, they open it up to the public.
That's actually really, I would love to see. I don't know why, but I'm the biggest nerd for that stuff. Whenever I go to New York to visit my family, all the museums, that would be sick. I genuinely would love that. That's
and
awesome.
they're rock. I don't know if you're into rocks, but like, I like rocks.
Not really. I feel like that's kind of a weird hobby. I do have a piece of meteorite right here. That's what that guy
How
is.
do you not be into rocks? You got a meteorite.
It's space rock. So let's just keep that.
So you're into space rocks. Extraterrestrial rocks.
Yep. Space rock is sick.
Noted. Okay. Erik, as always, thank you so much. Fascinating conversation. I hope everyone enjoyed it. Thank you all for tuning in. This is going to be the last Let's Talk Markets of 2025. We will be back to you in the new year. I wish you all happy, healthy new year. Have a great holiday. If you can, try and take some time off. I think we all need it. And I will see you on the other side of the new year.
Later, Gator.